Hello guys, this is Nico speaking, and in the past few months I've been posting some of the results of the analytics I've been doing, like the sonars, on this website. Recently I've added a few more things that I thought might be interesting, and I thought to give you a quick tour through a video in order to explain what they are about, which is probably easier than posting messages on Discord. So I'll start with the homepage. The homepage of this Sonar Analytics has two meters. One is the current value of the well sonar, which is at the P14 right now, and the other one is the last week's value of the well sonar, which was at the P20. So both of these values are very low. If you go to the tab Well Sonar, you can see actually the graph of the Well Sonar itself. You can see that currently we are at really low values. Down here, the value actually on the index 0 to 100 is 6, and that makes it at the P14 of the total history of the Well Sonar. The Well Sonar has the interpretation that a value of 100 means that the conditions are identical to those conditions that led to these two peaks, and a value of 0 means that we are as far away as possible from those two conditions. You could see that the Well Sonar at these two peaks, which you could say they were the peak of this current bull run, it didn't arrive at 100. So the conditions on the on-chain were not the same as those. So you could call it a miss. Here I've put a last update indicating when have I last updated the graphs, and also on the picture itself. I'll go to Deep Sonar. This is same as before, so I'll go to the most recent stuff just in a bit. So on the summary plot of the Deep Sonar, you can see that it is structured in a series of bar plots. The current value is with a green bar plot, and they are ordered here with respect to which one is the one with the lowest value. So we see that currently we have the largest similarity to the dip of 2020 September 08. That currently is the dip with the strongest similarity to the current conditions. So if we go to that dip, so this is the 2020 September 08, this is the dip that we are talking about, and the value of the dip sonar is right here. It's at the P3. So some hopium here. This is what happened after that dip. So let's hope this will repeat itself. With the other colors, I put here what was the value of the dip sonar for that reference dip 10 days ago and 30 days ago. So we see that 10 days ago we were not really so close to that dip, but that deteriorated in the last 10 days. 30 days ago, again, we were very similar to that dip. So we are like on off in around this reference dip. Let's go to the stock sonar. This is something I've been posting for some time now. So here is a summary plot of the stock sonar indicating all different stocks here on the horizontal axis, like the Mara, Riot, Argo, Hat, Bitfarms, and so on. And the different colors correspond to the values of the stock sonar today, 1 day ago, 2 days ago, 3 days ago, 4 days ago. So that's in order for us to have a picture, an overall picture across all assets. So we see that basically across all of them we are very negative, meaning we are in a deep territory for all of them, apart perhaps from any, and perhaps also DMG and DigiHost. Bitcoin, Ethereum, Hive, it's very in deep, and Riot also, it's in deep. So if we look at the particular graphs that generate this summary plot, sometimes we see a nice signal, like this is for bit farms. Bit farms goes in kind of cycles, ups and downs. Sometimes, however, it's not so clear. Like here for the Bitcoin graph, it is very choppy, up and down, up and down. So here the Sonar is really not a good indicator for us to give us a buy or a sell signal. It fluctuates way too much. For CAN also, that's a very nice business cycle pattern. We can understand much better when we are exiting or entering a buy zone or a sell zone. So the buy zone and sell zone are separated by this black line. Uh, uh, the top part is the buy zone, the bottom part is the sell zone. Let's go to the indicator analytics. So under the indicator analytics, so what we see here is a number of graphs which are structured in perhaps a really peculiar way, but I will explain why this is so. Let's go to something familiar like the RSI, but the logic is the same for all the indicators. So on the vertical axis is the values of the RSI from 20 up until 90, and on the horizontal axis is all the stocks. Up to here it's the stocks, and from here onwards are the various coins. So each of these boxes, the way to understand it is that the values in the past 1 year history, so 1 year ago, the RSI of all of these stocks, and each one in particular, the box contains 50% of the values of the RSI. So let's take an example. Let's take Mara. 50% of all the past 1 year values of RSI for Mara were between 40 and about 55. So from here up until up there. So that means that Mara never, so very rarely went to the 20 and the 80, which is considered to be the buy or the sell indicators. So for that reason, we could never get really a buy or a sell for Mara, because we never really visit the 20 or the 80, and same for the other stocks, because 50% of the time we are ranging between 40 and 55. So like this now, we can understand which are the ranges visited actually by any stock in the history of this stock. So Mara goes from here to here. Where is the current value? The current value is the cross. So we are near the low historical values visited by Mara. And the other 2 points, the 10 and the 30, help us understand the dynamics of RSI in this stock. So we see that 30 days ago we were above the median. So this black horizontal value is the P50, the median value. You can look at it perhaps like an average. And then we moved downwards 10 days ago, and now we move further down here. So we are now going into oversold levels, but oversold with respect to the history of this stock individually. Now, the interesting thing, I think, is that we can put all of these box plots next to each other, and we can understand the ranges of all the assets next to each other and how oversold or overbought are they with respect to each other. So we see, for example, that Voyager is one of the most oversold assets because it has exited the box plot. And we see also that Coinbase is also near the bottom. HAT is near the bottom of the box plot. Riot almost. So we can see that Ethereum is above the median, so it's still not oversold. So like this we understand. And here I've put all kinds of indicators in the same logic. For example, the top one is the 200-day Mayer multiple. Here we see Luna, for example. Luna has been, first of all, Luna has had a tremendous range of values for the Mayer multiple. The median value was around, let's say, 125. That means that the moving average of Luna was 1.25, its current value. So that means there is a very, very strong trend. And currently we are here and we are coming back from being totally overextended. But the other stocks are in oversold. So that's how it works, this page. Let's go to the next one. It's the retrospective. Under retrospective, the question we want to answer is, we want to know what happened in the past when the technical indicator was at the same level as it is today. So the first picture that we see is this one, which gives us a summary of all the stocks together. So we see that, let's take an example, Mara. Mara says that from where we are today, on average, we moved up by 15% in the next 15 days. And how do we find that? We find that in the following way. So here are the details of how this is computed. Let's go to Mara. It's this picture, Mara, it says here. So it is following this picture. This is the basis. So we see that when the on this axis are the different technical indicators and their distribution in the history of that stock. So let's take an example. The first one is the Mayer multiple of Mara. The second one is the Bollinger Band. The third is the width of the Bollinger Band. The fourth is the RSI. Then we have ADX, check-in money flow, and tricks. So what this box plot tells us is that when the Mayer multiple was at the same level as it is today, then we have 5 values in the history, in the past 1 year history, describing the price action for the next 15 days. And that range is between 10% and about 15%. So for Mayer multiple, when Mayer multiple had the same value as it has today, this is the distribution of values in the next 15 days. Let's go to the next one. This is the Bollinger Band. When the Bollinger Band had the same characteristics as today, this is the distribution of ranges in the history for the next 15 days, and so on, and so on, and so on. And so what can we do with all this information? Because they fluctuate quite a bit. Some of them tell us that the price action is pretty positive. Some of them, like this one, which is the ADX, tell us the price action was about minus 5%. So in the absence of, let's say, any other more sophisticated model, we take an average across all of them and the median. So the average across all of these data points gives us a price action of 8.5% and a median of 16%. And it is this median, the 16%, that is plotted up here. That is this value down there. So the same with all the other stocks. You can see that when the price action, in some cases, you have a wide range of price action across the different technical indicators. In some other cases, they kind of agree with each other. And that's kind of logical. Not all indicators agree with each other. So this may help us in case we assume that history can repeat itself. The next tab is the backtesting. So here what I show is I make a comparison between various strategies. A strategy based on MACD, whether MACD is positive or negative, a strategy based on tricks, a strategy based on CMF, and on balance volume. Let's take to explain what is tricks. Tricks is this value. What I'm showing here is BTC USD. What tricks does, it is taking 3 times a moving average on top of each other, and by doing that, it is smoothing all these fluctuations. So it is actually following the course of the stock, but it is smoothing all the fluctuations, and it helps us understand the actual trend. When we let's go back here. Tricks, the strategy based on tricks is when we are uptrending, when buy when tricks is uptrending, so the slope is positive, and sell when Trix is downtrending, so the slope is negative. It's a simple strategy, but let's see what happens with those simple strategies. Also, let me explain what is on-balance volume. On-balance volume is almost like a volume, but the formula for on-balance volume is that you add to the previous value either the current volume if the close is larger than the previous close, or you subtract the volume if the current close is less than the previous close. And because of that, because the on-balance volume is adding volumes and volumes and volumes, this is the course of the on-balance volume. It is an indicator on volume, but you cannot immediately compare it against all stocks because the volume of different stocks varies a lot. So that's why this strategy is based on whether on-balance volume is trending up or is trending down, and not on the actual value of the on-balance volume. But let's see what happens here. I have two figures here. The first is for stocks. The second one is for coins. And what I'm comparing is on the horizontal axis is the different stocks. Here on the vertical axis is the P&L starting from an initial 10,000. The backtesting period was 1 year. Which 1 year? Actually, from 1 year ago. Oops. From 1 year ago up to today. And the different colors correspond to the different strategies: Trix, MACD, on-balance volume, CMF, and buy and hold. Some interesting things is that actually if you would buy and hold, you wouldn't have had such a big difference with respect to the other strategies. Sometimes yes, like here for Mara, the best strategy would have been based on checking money flow. Same for any. Riot would the best strategy would have been Trix and based on balance volume, and actually the buy and hold would give you the least good strategy. And that's pretty logical because in the past 1 year, Riot was trending downwards quite a lot from the top of, I think, around 80 to 15, which is today. HAT, the best strategy by far is the checking money flow. On balance volume is not so different from the others. It would give you around 15,000. Argo, a bit of a disaster. And DigiHost, etc. This is the same comparison, but here for some coins: Bitcoin, Ethereum, Cardano, Luna, Ripple, Sol, Phantom, Polygon, and Avalanche. And here you see that in many cases, all strategies give you roughly the same figures, which means that why take some risk and not just buy and hold. For Luna, it was exceptionally good to just buy and hold, and you would have had the worst time of your life if you would follow the strategy based on balance volume. So that is to give us an idea of which strategy works or doesn't work for the different assets. Let's go to the company data. There are some figures here, like how many Bitcoins are mined per month: January, February, March. Here are the exact numbers and the figure. Core is like a beast. Here 1,000 on a monthly basis. What we see also is that from January to February, nearly all of them, they had a little drop, but then March they went up, nearly all of them. Hash rate gives us what is the hash rate for these months, the reported hash rate. We see that Core again has one of the biggest by far. It's like almost double of Riot and Mara. And here is the HODL in terms of how many Bitcoins they have on their accounts. Let's go to the next one. The next one is fear and greed. So here I am putting some information about the fear and greed. There are a number of different fear and greed indices out there. The ones I am based myself on is the one coming from this website, BTC Tools. but they are all definitely correlated to each other. So maybe the actual number is different, but if one fear and greed moves up, the other also moves up, and etc. What we see in this graph is how long are we staying in a current on a given bin. So let's say on the bin 20 to 30 on the values of fear and greed, we stay between 2 days and about 4 days. So 50% of the time we are staying between 2 days and 4.5 days. So that tells us how long. So that tells us that if we are overextended in our stay in this bin, we should expect a move to another bin. That's what it tells us. For example, right now we are in this bin. Right now is the current value marked with a cross, and we are here, which is the edge of the box plot. So we are at the 75% percentile. So we should be expecting a move to another bin. It could be this one or it could be that one, but the history tells us that we are only 25% of the times we kept on staying in this bin. Current duration 4 days, current value 36 days. The next graph is the rolling 30-day correlation between fear and greed and Bitcoin. So here, this blue line is not the fear and greed, it is not Bitcoin, it is actually the value of the correlation itself. It's the 30-day correlation. So what we see is that today we have a correlation, which is this red dot, of about 80%. So today we are 80% correlated between Bitcoin and fear and greed. And this 80% is above this dashed black line, and of course that one, and this is the 75% percentile. So we are talking about a very high correlation, even for historical standards. What that means is that we should here, because it is very high with respect to the history, we should expect a decoupling. It should go lower, because that's what we see always in the past. When we exceed this line, we move back down. So we should expect a decorrelation. And here, this graph tells us which of our assets is mostly correlated right now to the fear and greed. The blue is the 30-day correlation, and the orange is the 30-day correlation 5 days ago. So we see that Riot right now has the highest correlation to the fear and greed index. And because if this moves down, it means that also it means that it will decouple from Bitcoin, and so will also Riot. So let's move on. The last tab for you to explore is pair trading. So here, what I've put together, I've made two different sections. One is for coins and the other is for stocks. Pair trading is based on the idea that two assets are linked together and they are evolving in a similar way. So when one of the two is overextending with respect to the other, we should expect a kind of return to the equilibrium value. So the first question to ask is, which are the pairs that are linked together? And to answer that question, we do a test which is called a co-integration test. And we look at the p-value coming out of that test, which is the probability that the two assets are separated. So when the p-value is 0, it means that they are linked together. And which ones are closest to 0 on this heat map? The ones closest to 0 are towards green. So all these three assets are very linked together. But the one in green is Ethereum with Solana. So Ethereum with Solana is the pair right now most linked, most co-integrated. And here is a graph. The black is Ethereum, the red is Solana, The p-value of the co-integration test tells us that they are very linked together in the past 1 year. And we expect, and the bottom graph here is the z-score of the spread. So here we saw that Ethereum was overextended. We saw it here, and that means we can take a position here, and we should expect a return back to this median as we see here. So you can play this out. You can sell one or buy the other if you have both coins, or convert them one to the other. And when you so you do this conversion when you exit this dotted line, and because you are expecting a return back to the equilibrium, when that happens, you close the position and you convert it back. Yeah. So for the other coins, we see so the other two, Cadena and Luna, we see that history tells us that they are also co-integrated. Here there was a move by Cadena, which was not followed by Luna, but it came back. And now it's the other way. Luna went up, and so if you have both of them on your Binance and you can convert one to the other, that might be an interesting play. And the same we do the pair trading for stocks. So here are the values. You look for the pairs that are in green. More green means more towards zero, meaning more co-integration. And here, so here you find quite a lot. And here are the exact details. Okay, so I hope you find this useful. And these pages will be updated on a very regular basis. And my plan is to provide a kind of a summary of how I see the analysis here happening, and give you a quick explanation of what I see. So thank you very much, and good luck with your trading.